Joe, let's get right into it. You're a lawyer. You are a, I guess you deal with a lot of Bitcoin companies. You, in my experience, you go into the details. You like to be a contrarian. How did you get into Bitcoin?
Great question. I don't know if I like to be a contrarian. I wouldn't phrase that. I think I appreciate trying to see the other side of the story. It helps my improve my thinking, and I think the interesting thing is being somewhat of a person who tries to unpack a lot of issues. That's really what led me to Bitcoin, right? Because I think in my experience, I first began in 2015 with some folks talking about Bitcoin. I had been skeptical for many years, 2013, 2014, as many people are, and I had clients messing around with it. So that naturally piqued my interest. And I decided that I wanted to sort of figure out why this won't work, right? I approached it from the standpoint of let's try to unpack this and figure out what is the flaw? How is this going to end? It's going to be a really bad situation for everybody. And as I did that and spent time with it and did my best to understand everything from the white paper to the code to market dynamics of it to really how it fits in our current credit system, I couldn't figure out why it wouldn't work. I found vulnerabilities, I think, in the short run about price and speculation bubbles, but that's not really a justification for why it wouldn't work as a system long run and why it couldn't serve something that the system desperately needs, which is a form of collateral that is not tied to government securities. So when I started to unpack this and fight through the issues, I realized, okay, maybe you're wrong on this, Joe. Maybe your natural healthy skepticism is incorrect. So with some clients, representing them, and obviously starting playing around with it, buying some, you get more of a market interest. And then really, it's just sort of obsessed a lot of my thoughts for the last several years, as many people that fall down the rabbit hole experience, right? It's just so interesting. There's so many different aspects of it, economic, political, et cetera. So what I did is I sort of decided, okay, this is going to grow. I think this is going to be big. So I want to target my general commercial litigation practice group to focusing on Bitcoin disputes and even some crypto disputes. I have plenty of those as well. People, everybody that wants to launch a token necessarily gets sued at some point. I've sort of have about half my practice right now that is devoted in the broader cryptocurrency space. I represent a lot of miners, people involved in litigated disputes and breach of fiduciary duty claims as well, some securities litigation. And overall, I'm really happy because I think that this industry is going to grow exponentially, and I'm one of the few litigators out there. There's only a few dozen that can say credibly that they've had orders entered, requiring assets to be turned over if they're on the Bitcoin blockchain, that have had mining disputes that have been fully litigated. And from my standpoint, it's exciting because I get to do that, which I love, which is talk about Bitcoin in a courtroom. And at the same time, since I was very young, I've been involved in markets just generally. My dad had me trading, I'm not exaggerating here, like when I was in my teens, very early on a custodial account. So I've always loved markets. I love the information that is transmitted through market structures. And as an amateur investor and handling some money for friends and family, I love Bitcoin because I think it's going to eat the world, as they say, over time.
Yeah, I completely agree. I heard you talking about in one of your podcasts. You were saying how you can access Bitcoin from multiple locations.
Yeah.
It's basically it's everywhere and nowhere at the same time. Can you expand on that just from your perspective as somebody who's dealt with asset seizures?
Oh, it's so significant. And spoiler alert, right here. I've written a book on it, a fiction legal
Mm.
thriller that I'm still trying to get finished through the editing process. Slow and steady, but I've been delayed. But the idea is right. Like our whole idea of possession. Okay, what does it mean to possess Bitcoin? You throw it out the window when it comes really to Bitcoin, in my mind. And I know that there are some lawyers and courts that have taken opinions that agree with me, and some that have taken opinions that disagree with me. But for my purposes, right, like the law is designed around possessory rights. It's designed around you saying this owner of an asset is not necessarily the possessor of the asset. You kind of separate those out. You may own real estate all over the world, right? But you don't necessarily possess the real estate because you're not actually physically present. And in our typical structures, when they say possession is 9/10 of the law, right, it's very simple, right? The asset is located physically here. Therefore, those who have dominion and control over it physically in this location, they're the possessors. And someone may have ownership rights, but that's sort of a different story. So how does that relate to Bitcoin? Well, with Bitcoin, what you really own, if you want to break it down, is you own, and I've done this for judges and juries, right? You really own a password, right? You own a private key that can exercise dominion and control over the Bitcoin. But mere possession of the private key, while it can be indicia in my world of ownership and possession, does not necessarily mean it is ownership and possession, right? Because number one, that key can be replicated hundreds of times, thousands of times, millions of times, right? Do all those people who have the private key, do they all own Bitcoin? Well, how is that possible under the law? How is it possible for everybody who has a copy of the key to own the Bitcoin and possess the Bitcoin? And also, obviously, when you give your private key up to someone else, that doesn't necessarily mean you don't own the Bitcoin, right? We know this from many litigated cases where I can rely on a custodian to hold my private key. I still have an ownership interest in it, or I can define an ownership interest. So I think the traditional notions in some of possession in the context of Bitcoin are really thrown out the window because the Bitcoin isn't actually anywhere. Right? I mean, the Bitcoin does. People like to say. I always think it's funny. I read these things like X amount of Bitcoin is in the United States. How is that possible? The Bitcoin isn't actually in the United States. You may have owners who have a claim to the Bitcoin in the United States. You may have BlackRock and its trust, and they may hold the private key in the United States. But Bitcoin isn't anywhere, and it's everywhere at once. Right? The fact that Bitcoin doesn't have borders that it can electronically transmit, and it's really just that password you have. In my mind, that basically it abrogates the idea of a particular domicile or jurisdiction holding Bitcoin. I read articles about the Bitcoin was seized. No, it wasn't. You seized the private key. You seized the private key, which you theoretically could use to exercise dominion and control over the Bitcoin on a blockchain. You could send it somewhere, right? But even if you have the private key, right, what is its relationship? What does it mean to have the private key and not exercise it, not utilize it to move the Bitcoin? It's a really fascinating question. I think a lot of judges and lawyers have sort of not looked into the nuance of it because from my standpoint, like just mere control of a private key, in my mind, does not equate to control of Bitcoin. So anyway, it's a long philosophical sort of legal issue, but I think it's one we're going to have to deal with because there's going to be a lot of hypotheticals that come up over the years and real cases and fact patterns where I think it will be confusing to judges who actually owns the Bitcoin.
Who actually owns? Yeah, that's the key. So what would you say is control of a Bitcoin? Owning the private key isn't controlling the Bitcoin. I mean, would you say owning the private key?
Can you own a private key? I mean, that's even another
Yeah.
big issue, right? Can you own a private key? What does it mean to own a private key? And now, possession is different, right? Do I possess the Bitcoin? I have. Well, what does that mean? Well, okay. Some people, as they use it colloquially, they're saying, well, the possession means that I have the private key in my house. Okay, it's in my house. Okay, but what if it's elsewhere? And what if you have a multi-sig? We make it even more complicated, right? Where multiple actors are required. No individual. So just an example, you and I and someone else. We'll just insert, a friend of ours, my friend Greg Foss. Okay, you and I and Greg Foss have a 2 of 3 multi-sig. I can't do anything with the Bitcoin because I need your support or Greg's support to have the majority, the 2 or 3. Okay. Do I possess Bitcoin?
No,
Why not?
you can't access it. You can't do
Okay,
anything
great.
with it.
So then if you're a court and you're looking at this issue and I can't do anything and you can't do anything and Greg can't do anything alone, you need 2 of us. Okay, who possesses the Bitcoin? Who actually possesses it?
I mean, I would say, I think it can go a little deeper. I think it's more like a synergy where multiple people possess it. If they come together, if they're able to agree on something, then they can possess it. But individually, nobody possesses it.
You're right. So that's the most interesting part. So let's put aside the synergy for a second because that's like the easier one. But if you take all 3 of us individually, if none of us individually possess it, and you need 2 of us Okay, that is a possessory right that is multiple individuals, that no single actor has. There is not a single uh, analogy for that under the law currently. There's no case law about a possessory right that is divided among multiple parties. Okay, there may be ownership rights. There's plenty of case law about ownership rights. You and I both have a 50% interest in a house, right? That's very clear, right? But in terms of possession, if you're trying to figure out where is the Bitcoin now, okay, where is it? It's nowhere. It is nowhere. It's on the blockchain, which means it's on all these nodes, tens of thousands of nodes scattered across the world. And it's not really there, right? It's a ledger entry reflecting that in this. I always like to use the example in front of a courtroom. It's like a giant Excel sheet, right? In the giant Excel sheet, it indicates that right here in this address, there is Bitcoin. It's not really anywhere. The fact that there's an Excel sheet and there's a data written in the number, some sort of data entry written in there, doesn't mean that the number exists somewhere in reality. So you get in these sort of metaphysical questions about like these sorts of issues, and courts will have to deal with them. I think over time, and that's really fascinating to me. It's going to be. I can't wait to get some of these cases where it's been. Most of the cases we've had are sort of clear cut so far, but you're going to get more complex situations as the technology evolves, as multisigs proliferate, as people try to seize Bitcoin and people claim ownership rights over it. And you really always start with possession, because if you can't figure out who possesses it, that makes it difficult to haul that person, him or her or they, into court and orders and enter orders against them. Right? You have to first start with who has the money. Who has the money? Is it Chase Bank? Is it Joe? Is it buried in a mattress? Is it in this house? If you can't figure out who possesses it, it in many ways limits or handicaps your legal rights.
Is this what your book goes into? Is this the
Oh
details?
no, no. So my book's much. I'm a big believer that most people, and this partly why I sort of take my approach on Twitter that I do. I think most people, they don't want to be lectured about something boring, right? They want to be entertained. So I have a legal thriller that I've written, and the legal thriller, it's got some juicy, sexy stories behind possessory rights, and about different people after assets of Bitcoin. And it's supposed to be sort of the typical, like, instead of the thriller about where's the money at, where's the $1 million, it's in Bitcoin, right? You've got all these parties grappling with the private key, how to obtain the private key. So I tried to make it entertaining enough where if somebody who did not know anything about Bitcoin, they could pick up the book, they could read it, they could say, wow, that's really interesting, how this possessory right is transferred from person to person, and what the notion of the private key is. And take your old fashioned thriller about trying to get the bag of money instead of or the briefcase of money, instead of it being a bag or briefcase of money. Let's talk about being Bitcoin, and make it really engaging for people. And hopefully if they walk away from it, they'll say, that's really, now I understand how this works. I understand it conceptually. Because I think a lot of the people that look at Bitcoin, they look at it like a stock. Okay, I run into a ton of boomers who say, well, I want to, and the ETFs in some ways are making this even worse, right? They're saying, well, it's in my Coinbase account, or it's in my ETF now with BlackRock. They don't experience the really magic of Bitcoin. And I always say, if you are somebody listening to this, okay, and you've been in Bitcoin for years, you've got a small allocation, take the time to actually send an on-chain transaction. Um, I I've talked to people, lawyers and judges, and if you don't send an on-chain transaction, with all due respect, I do not really respect your opinion about Bitcoin. Okay, you have to see how the technology actually works, and you may conclude this is worthless. It doesn't. It's garbage. But at least make an informed opinion, right? When I first sent Bitcoin transactions on chain, that was the light bulb moment for me. For whatever reason, when I realized that I could send this and have this huge network of nodes validate the transactions and the miners and do all the activity under the hood, and see it confirm on chain, that was the light bulb moment for me, because it was real. It was more organic to me, seeing that reaction, seeing that sent out. I think a ton of people in Bitcoin. I wish I had numbers on it, but I would guess there's a huge amount, 20-30%, who have held Bitcoin who have never sent an on-chain transaction.
Yeah, I think I would agree with that. I would honestly say it's probably higher than that. I don't know,
Maybe.
maybe I'm wrong, but because
Yeah.
a lot of people, they're just buying on Coinbase and they're just leaving it on there. They don't even. You'd be surprised with how many people have no clue that you can take Bitcoin into self custody. They don't understand it. They think that
No,
um, let's say, for example, if you put Bitcoin in a cold wallet, they think that somehow it stops appreciating in value. Like they
exactly.
actually think that. I've gotten that question from people. So if I put my Bitcoin in my cold wallet, then or my hardware device, my private key in my hardware device, I would take self custody, I guess. How will it still increase in value? And I think that's what really gets people,
Yeah.
because they don't see it as something that you just hold on to, and they don't see it as a commodity. They see it as a stock, like you said. They don't.
Yeah.
They think. No, go ahead.
No, I had a friend who told me that, get this, it's kind of interesting. He did not want. I tried to warn him. He actually had Bitcoin on FTX. He did not want to do it, and his rationale for moving it to cold storage. And I was pestering, you got to get that stuff off there. His rationale was that he wanted to be able to open the app and check his account balance every day. That was what he wanted. It was that silly, right? Like something you could easily do the math. You own X amount of Bitcoin, multiply it by the current market price. You don't need an app to tell you that. And he's like, no, I just like opening it and watching it go up in value. And I think there's a lot of people like that. And unfortunately, he lost his Bitcoin because of the FTX collapse, right? So this people are going to learn this lesson. They're going to learn that the beauty of Bitcoin really is in its self custody. I know that right now in the interim, we're building up the store of value phase. We're trying to get it to a massive asset that has liquidity and can, serve as a alternative to government securities and government treasuries. I get that. Everything's a journey, right? But over time, people will realize that one of the killer applications of Bitcoin is the ability to self custody. And we're probably a decade or more away. I mean, to be honest, before widespread people, understand how important this is. But that doesn't mean it won't come. And everything's a process, and everything's, there's a season for everything, right? So we'll get there.
Yeah, I think eventually, all I know is that over time it's just going to get better. It's not going to get worse. It's not going to get harder to self custody. It's not going to get harder to download an app on your phone. It gets
No.
easier and easier, and it'll just continue that way. So I was listening to one of your conversations where actually I think you posted it a couple of times on Twitter as well, where you said over the next few years we may not see these massive drops. We may just see the price increasing every year.
Yeah.
Why do you think that is?
Well, right. First off, it's never there's never any guarantees, right, in markets. So you have to
Of
start
course.
from the standpoint that I don't have a crystal ball any more than anybody else has a crystal ball throwing out crazy price targets. But what I believe about Bitcoin is I believe you're entering, not necessarily arrived at, but you're entering a more mature market phase. And with maturity, with increased liquidity, with derivatives, all of these things tamper down volatility. Okay, they make it so that people do not have to experience, I think, the more dramatic price swings. Let's talk about why that is. Because before the derivative complex was put in place on Bitcoin, before you had options and the futures and all these other hedging tools and proxies for Bitcoin, you had spot Bitcoin. And the spot Bitcoin would be gobbled up on exchanges. Okay. You'd had some derivative shops overseas. They were black boxes. They were spoofing. They were doing things that, I think have now been exposed as unlawful in many jurisdictions. For example, the BitMEXs of the world. But putting all that aside, you had most of the real activity in Bitcoin driven by the spot market. Okay. And as commodities mature, okay, what you tend to have is more activity driven by the futures markets. Even gold, right? Gold is very old, right? A lot of boomers love gold. They love buying the GLD in their brokerage accounts. It's a huge, massive ETF. Everybody points out the ETF of GLD and the price action and appreciation. I agree with all that. My point is that even today, where does the majority of liquidity, volume, and impact on the price come in the gold market? It comes from the gold futures market. The gold CME futures market and other futures markets of gold abroad, they drive a lot of liquidity. Why is that important? That's important because those derivatives, okay, are going to lead the spot market. And in the way that they lead the spot market, what you tend to see is dampened down volatility. And there's academic research on this going back decades, right? Bitcoin is still very small. So I'm not saying you can't have 10% ups and 20% ups, and those will probably continue for the foreseeable future, right? But the notion that I think you're going to get these 80% very quick drawdowns in an asset that gets bigger, to me, I think is rebutted by a lot of history about maturing asset classes. The volatility in stocks that are smaller, right, high beta stocks, is due to the fact that they are smaller and less liquid. Okay. And what derivatives and options and futures do is they increase liquidity. They make it so that volatility gets tampered down. And people see that as a negative. I don't view it as a negative. The fact that the volatility of the S&P 500 is lower than other high beta instruments is, to me, attractive. It's why a lot of investors like the S&P 500. Sure, you can get a 20-30% drawdown coincident with some economic data or a slowing economy or profits coming in lower than expected, earnings declining. You can see all that, no doubt, right? But you do not see as much volatility in the S&P 500 as you do in, say, the Russell or some of these other assets. It's because it's more liquid. It's got a deeper market. It's got more derivatives. It's got, more investors that realize that they're going to hold for the long term. So, even let's just use an example. You get up to 100K on Bitcoin. Okay. Do you believe, and I'll just ask you, and I'll tell you my bias. I don't, but do you believe personally that you're going to see a massive inflow of coins coming to exchanges to dump at 100K? Is that your view?
I think it could go both ways. I think there are a lot of the people who own Bitcoin don't truly understand what they own, right? So I know a lot of people who own tens of coins who actually don't even think Bitcoin is going to go to $1 million. So I wouldn't be surprised if that happens, but I
Hmm.
get where you're going to. I think you don't believe that
No, I
because
don't.
there's nothing better.
No, I think that the higher Bitcoin goes, the higher it goes, the less risk there is. And this
Yeah.
might be very counterintuitive to people because I think they're still thinking in the mindset of the 2016, 2017 era where Bitcoin was blowing off and suddenly you had overnight, multimillionaires, eight-figure, multimillionaires that were rich from, relatively small amounts of money. That led to them, I got to take this, I got to capture my fiat gains. I think now most of the people that hold Bitcoin are holding it more longer term. They think that 100K is sort of almost disappointing, which is kind of incredible when you think about it. I think there are numbers out there that would incentivize people, let's say post 2019 to part ways with coins. Those numbers in my mind are very high. They're $200,000, $300,000. That's where people say, okay, this is so much money that I'm going to um, need to dump. But the reality is to get from 100 to 200 to 300, right, you're going to need bigger pools, institutional sizes of capital. And those institutional sizes do not have the same short-termitis as the retail does. So I think that there's plenty of market structure plays that would suggest that the climb upward from here might be more slow and steady than this big explosive thing. I make fun of the folks that are like, well, the God candle's coming. And I always wonder, like, where do you think that capital is coming from? Because let's assume we're all right and there's going to be a ton of institutional capital. The institutional capital is not going to just come and market buy. That's more of retail behavior. Institutional capital is much more slow and deliberate. It deploys capital over quarters. It tells people, think about the long term. I mean, all the financial advisors that are going to have the talking points, I think, by Q1 from some of the folks I've talked to start pitching Bitcoin, they're going to tell people start with a small allocation and then slowly over time build up that allocation, dollar cost average. I mean, every financial advisor worth his salt that tells you how to build wealth is not going to tell you to just dump all your money in at once. What they'll tell you is they'll slowly build out in a responsible way a portfolio. So I don't know, maybe you disagree with that, but that's generally what
No,
I
I
hear.
agree. I agree. I
Yeah.
agree.
The mindset is different. The get rich quick mindset, I think, is dying in Bitcoin. I think the longer term store of value, invest like the S&P 500 mindset is beginning. And that's not to say, people always hear this and they say, oh, well, we're going to have all these disappointing returns. No, because you have to think about it as risk adjusted returns. Okay. The speculative altcoins that people talk about that pump 20, 30x, yeah, they're fun, but they're more akin to gambling. The risk reward is terrible on those things. Okay, you have to trade, you have to calculate a top, you have to calculate a bottom. If Bitcoin can give slow and steady returns on a consistent basis for multiple year periods, it becomes a much better alternative to the ETFs like the S&P 500 and the Qs and mutual fund derivatives thereof, which is what people really want. People really love the fact that the S&P 500 can give you that 10, 11% every year. Boomers love it. They think it's like the greatest thing in the world. Imagine if Bitcoin over the next 4 or 5 years can give you a consistent 15 or 20% return. That is massive. That's a game-changing investment. And I think people are still stuck in the past with how Bitcoin has to trade with these boom and bust cycles, which I think that's going to be, my base case is that that's not going to be the case moving forward.
I do. So I see where you're coming from here, but I also see the other side of things where, okay, so I used to work in a brokerage, and I worked during the time. Do you remember when the cannabis stocks, all the weed
Yeah,
stocks started blowing up? Uh, people who were, I guess, people who were well versed in the industry, they had started buying early. They'd started buying really early. They started buying in like 2012, 2013, 15. But the retail investors started buying in 2016, 2017, 2018, I think it was. But what happened was the price was moving sideways, and then it just skyrocketed. But the thing with these stocks is that more stocks can be issued, more
yeah.
companies can create more stock. I think that Bitcoin is going to be different because so with how FTX, of course, BlackRock is one of the companies that's going to be getting the majority of all the volume from retail investors. But I think that as people really figure out what Bitcoin is and what the value of Bitcoin is, they're going to want to take self custody.
Yeah.
And because of that, I think the price. I get where you're coming from. I get that the price it'll consistently go up over time. But the way that I see it, I think it could go. I think it needs to form a much much higher base before that happens,
Um,
right?
yeah. Yeah. I think that makes
Right.
sense.
So like it could probably go to 3, 5, or $1 million, and then it becomes more flat. Because at that point, the people who want to own it, the people who have the long term perspective may have gotten out. But I don't know. What are your thoughts on that?
Well, let's just play through the scenarios. Let's pretend Bitcoin in a couple months, okay? Which I've heard people say this, so it's not. I think it's ludicrous, but let's just say in a couple months, Bitcoin goes to $1 million a coin. I think you're going to see a flood of people, even 2017ers, like even 2018ers, that are going to sell a ton of Bitcoin, and I expect the price to crash very quickly,
Yeah.
because it's just too much money. It's the amount of money, even with the high rates of inflation, 3% inflation that we're seeing now. Even with that, you're talking about people with tens of hundreds of millions of dollars. I think you'd see an absolute flood of coins to exchanges. Now, I think that to get to those numbers on a market cap basis, you need one of two things. You need either some sort of crisis or calamity, okay, which I think is possible, right, but unlikely. Or you need something like massive amounts of cash. I'm talking, hundreds of billions of dollars flowing in a very short time period. And that will require major investors to just FOMO market buy. And my experience is that that's not how most institutional investors acquire positions. They do not acquire it like retail. They do not experience the same FOMO. They have institutional safeguards to make that process more slow and steady. So I reject the God candle narrative. I don't think that this market, given its size, can have a God candle in the short run. That doesn't make me a bear. It just makes me, I think, realistic to the market structure. From the standpoint of Bitcoin, let's use your example of the cannabis stocks. Okay, the cannabis stocks are equities based on valuations, right? So people that are deploying major amounts of capital into that space, they realize, okay, there is some fundamental valuation for that company, and after it gets to an absurd price, earnings or forward or trailing earnings, whatever you want to use the calculation, they're going to say, we are going to exit our position here. The difference with Bitcoin, I think, is that Bitcoin does not have a fundamental valuation with respect to earnings or cash flow. It's a non-cash flow asset. What is its fundamental valuation that I think is driving the current Bitcoin price action? I don't even think it's the attributes we talk about, like self-custody, the finite amount. I think the real fundamental thing that's driving Bitcoin's current price appreciation is the allocation investors have to it currently. So let me explain. I think the fact that people are quote unquote diversifying to Bitcoin is driven primarily because they realize we have 90% equities. We maybe have, depending on your age, let's say we have 20% or 10% bonds or some sort of fixed income exposure. We want to have something other than government securities and equities. And we want Bitcoin because of all the commodities out there, it is the one commodity you can't create more of, right? You can't get more. You can get more oil, you can get more gold. We know that there's finite amounts of these things, but the production always seems to increase. Like we always seem to find new sources of gold and new sources of oil and all these other commodities. So from my standpoint, like I think that the critical thing that's going to drive a lot of the Bitcoin price action over the next several years is they're going to start to say, financial advisors will start to say, we need to have you have a 5% Bitcoin allocation or 10% Bitcoin allocation. And that steady stream of allocations from other assets, particularly stocks and bonds, into Bitcoin, I think is going to cause a slow and steady rise of the price over time. I could be wrong, right? We could have the same boom and bust cycle, or we could have it from a higher threshold. But I just don't believe that suddenly huge piles of capital are just going to market buy in the way they had earlier. In 2017, for example, which was, I was involved in 2015. We had 2016, 2017 bull run. That was sort of front of mind for me, as a 2015 adopter. You had a bunch of people who woke up to Bitcoin, who had never heard of Bitcoin, who suddenly it's on Saturday Night Live and it's all over the news and and those people had FOMO where they pushed tons of capital into the market in a very small amount of time. I mean, you may remember, I don't know, I think you were in the markets at that point with Bitcoin, but we went from like 4K in at the end of summer, early fall, to like 20K in a short amount of time. The only way you get that sort of blow off price action, I think, is people saying, I need to have ownership of this. I've never heard of this thing. It's going like crazy. I'm going to throw money at it. That's not what big pots of money do. I mean, the ETFs have been an overwhelming success. And I think we've only seen about $20 billion odd dollars, correct me if I'm wrong on that, 20 billion come into the ETFs so far. That shows you that they're more deliberate, they're methodical in how they're acquiring the positions.
Yeah. I mean, wouldn't you argue that the options trading is something that could push that massive flow of cash into Bitcoin, because now people can generate cash flow?
Okay, let's talk about the options trading. Okay.
Yeah.
So right now you can generate cash flow with Bitcoin with options on the futures contracts, right? We can do that if you have a Bitcoin position. The difference is that the options on the ETF are going to make it more accessible for retail who don't have exposure to futures. So overall, as I've said many times, I think options on the ETFs are they're pro liquidity, they're favorable. They're going to give a lot more of a, no pun intended, option to retail investors to put on trades that I think are going to, again, dampen down volatility, but also increase liquidity, which are both positive in my views long-term for Bitcoin. But, and this is the big but, in any environment, as we talked about from the beginning, you have to look at what is the big gorilla in the room with respect to liquidity and volume. And the big gorilla in the Bitcoin marketplace will continue to be the derivatives complex that are futures and options, particularly a lot still overseas outside the United States, even outside the CME. So the reason I bring that up is for the options on the for the options on the spot ETFs to be the massive driver of capital and massive, gamma squeeze that people are talking about, those options need to get bigger than the futures and derivative complex. Okay.
Right.
And the difference, like think about GME. Okay. GME, you had them lending out more of the shares than existed, right? That caused this short squeeze, the gamma squeeze. And you also had massive options positioning being opened up, which forced market makers to hedge by market buying the shares. You know what they didn't have access to in the GME short squeeze? They didn't have access to futures on GME. The future,
Right.
if there had been a futures market as robust as the shares, okay, there would have been more hedging opportunities, and you would not have seen the same reaction from the GME short squeeze as you do now. What is the difference with Bitcoin? The difference with Bitcoin is you have the massive CME. The CME Bitcoin futures are huge, as well as many other derivative contracts abroad that are traded with Bitcoin. So it's a different market structure. And to make the argument that you're going to get a squeeze from the options alone, I think what you have to say is you have to say that the spot Bitcoin ETFs are going to grow bigger than the futures complex, which is, by all accounts, much more significant currently.
Do you think that could happen? Do you
Sure.
think that
Yeah. I mean, anything's possible. But I look at, for example, the gold ETF. Right. Gold's very old, and people love gold. Boomers love gold. Right. Compare the volume of the GLD, the gold spot ETF, to the volume of the CME futures on gold.
what's the difference like?
I mean, almost most days you're going to see more volume from the futures. I mean, there are a handful of
Right.
exceptions, but most of the time you're going to see more volume, more liquidity, more trading in the futures. So to me,
Right.
that tells you that if you're a big trader, you're putting on big positions. Why are you messing around with the spot ETF? The spot ETF are well suited for buy and hold investors who don't have to deal with roll and other issues with the futures. And I mean, I'm sure you're well aware about how the futures ETFs, which saw a lot of inflows and exposure, the effect that has on the Bitcoin price with roll. And those futures products are terrible for retail, but they're great for traders who are more of the tourists. They're going to play in the futures market and put on massive positions with leverage, which is going to actually move the spot price. And this is consistent with all the commodities research we've seen for decades. The futures markets lead the spot. And you can Google this and see, outside of the context. I mean, maybe Bitcoin will be different as a commodity. We don't really know. It's important to say that, but I tend to think that commodity market is commodities market, and you need to sort of put that in your weighting in terms of probabilities.
But I mean, I would say Bitcoin is a completely different commodity from everything else because of the the finite supply, because of the fact that you can take self custody. For example, with lumber futures, you're not gonna you might gamble on lumber, but you're not gonna take possession of
Yeah.
all that lumber, right? You might gamble with oil futures, but you're not gonna gamble with taking a million barrels of oil into your house, right?
Well,
So
you
I
can't
think
you
with
can't do that with Bitcoin either. Keep in mind, even as of today, the futures CME contracts are cash settled. Okay, they're not
okay,
physically settled. Nobody's taking. I would love there to be physically settled Bitcoin contracts where people take possession of
yeah.
Bitcoin. But to use your example, right? The Bitcoin futures contracts that are cash settled by the CME, they are, for all functional purposes, no different than the lumber future contracts that are settled. They're the same, right? Because you can't take possession of the Bitcoin.
But do you think that what we see as cash could change at some point? Like, I mean, what we see as cash today is U.S. dollars.
Mm-hmm.
Are you on the side that maybe the U.S. dollar could be, I mean, completely replaced by Bitcoin? What if that's the future? What happens at
On a
that point?
long enough time frame.
Yeah.
I mean, yeah, if you're talking 40, 50 years from now, sure.
Well, you think it'll take that long? Okay.
I'm so okay. Again, like we're speculating about stuff decades in the future. The
Of course,
world can
of
take
course.
a really crazy path, and
I
I
think this
don't
is
want.
the fun thing, though, right? This is the fun
Yeah.
thing about podcasts. You can actually do this. So
Of course, and I love doing it. Okay, I love talking about this stuff, and the great questions, by the way. I mean, um, I think in the near term, okay, and this is just not a Bitcoin thing. This is sort of a more of a macro sense. I am a proponent and believer in Brent Johnson's dollar milkshake theory. I think most of the other fiat currencies in the world will depreciate relative to the dollar. Okay, relative to the dollar. That doesn't mean the dollar is going to be, saving you in goods and services and protecting your purchasing power. That's not what I'm saying. It also doesn't. I don't think it suggests in any way that America can't have serious issues, but on a relative basis, I expect many other currencies, just to simplify for those who haven't heard Brent's theory, which I highly recommend anybody in your podcast, go search out Brent. And if you haven't had him on, you should have him on as well. because he's done, a lot of talk about, he's talked a lot about Bitcoin, and I think he adds a lot. But the thesis is this: the world is awash in debt, okay? And that's not a secret. And the debt primarily is denominated in dollars. So what does that mean? That means to service the debt on a going forward basis, every country, every single sovereign outside of the United States has to, quote unquote, print dollars. They have to print their local currency, which will depreciate because they're printing it, ad infinitum. And then they have to go buy dollars to service their debts. So what does that do? That creates upward buying pressure on the dollar. And the dollar is short. This is why people get confused when they look at the DXY chart and they look at the DXY hovering above 100, and they compare that with all of the stimulus money, all of the QE, all of the trillions of dollars spent behind the government. And the dollar is higher today on a relative basis versus other currencies than it was 10 years ago. Another fact just to point out is that everybody talks about how big the national debt is of the United States, but there are more dollar denominated debts outside the United States than the entirety of US dollar denominated debts. And guess what? All those dollar denominated debts outside the United States, they don't have access to the quote unquote money printer that we do in this country. So who's in a better position to service their debts? Is it the countries that have to debase their own currency to buy dollars to service their massive amounts of dollar denominated debt? Or is it the United States, which has a lot of debt also, but has access to a money printer to debase it? To me, it is easily the latter, and it's not a question. So in terms of like the going forward, what happens to the dollar, which is why we started down this rabbit hole, from my standpoint here, I think you're going to see many other fiats start to become debased and wrecked much faster than you'll see the dollar. And I think that process can take a long time to play out. It can take decades. So people need to be tempered with their expectations.
No, I agree. I think it won't happen overnight. It'll take time. The dollar it has such deep markets. It has it's almost like a I almost think the dollar is like a religion at this point,
It is.
right? I mean, people
It,
just want. No, go
why
ahead.
do people have when you're a commercial entity? Okay, just think of it, and it's all about belief, right? It's not about reality; it's about the perception of reality, and perceptions can change, and you need to start with that
Yeah,
standpoint, right? But you and I are doing a foreign transaction. Okay, we're selling 100 million barrels of oil. We want to do the transaction for 3 years. We want to write up a contract and hire Joe or my firm rather, to get involved in the transaction. Okay, so we're going to do this contract, and then the most basic most basic element of the contract is purchase price, right? What is going to be our purchase price? And what matters to you as an economic actor isn't really what is the settlement of it. We could settle it in any different we could settle in Apple stock. We could settle in any different variety of things. You have to owe me X amount of, of goats to settle this transaction. It doesn't really matter how they actually get settled. What matters is the unit of account for the actual settlement. And what people do globally, and we see this, is that they say it's going to be the dollar as the denominated amount of settlement. So if we're going to sell 100 million barrels of oil, it's going to be X amount of millions of dollars. And if I pay you to close that transaction, if I pay you in yen, or I pay you in Bitcoin, or I pay you in goats, or I pay you in cheese, it doesn't really matter as long as I get my 100 billion USD equivalent. Okay, so this happens all over the world, right? They spell out contracts and engagements where the unit of account, where the deciding dollar that they put trust in is dollar denominated. And if you pay it in yen, nobody really cares. You just have to pay the spread, between the yen and the dollar, whatever that is, whatever the foreign forex transaction fee is. And from my standpoint, the reason that's relevant, I think, is because if you're analyzing all this on a global layer, people keep talking about the BRICS and how they're going to settle things in oil, or they're going to settle it in this, or they're going to settle in, whatever, yuan. The reality is, I don't care about the settlement. I care about what is it being denominated. And to answer your question, what are you willing to put your faith in as being a reliable way of settling the transaction? It's a faith. It's a question, right? What is the preference of businessmen? Would you right now feel comfortable doing a multi-billion-dollar deal in the Russian ruble?
No.
Maybe you would, maybe you wouldn't. I don't know, but I know that currently the market overwhelmingly prefers the dollar. And until that changes, until you see people saying there's no freaking way I am settling any, or I'm using it as a unit of account for my transaction, the dollar. How do you unstick that? It's very, it's very difficult.
Yeah, it's going to take a lot of time. It's definitely going to take a lot of time. I think there's always going to be people who, um, not even, I would say even fall for the trap of thinking that the dollar is going to exist forever and they're
Yeah.
never going to change that belief. And until they, not to be morbid here, but they're going to have to pass away for that belief to be finished with
Or
them.
or
And
or there has to be something fundamentally that changes. Right.
yes,
That's the other big thing. Like, there's that old adage that, there are years where nothing happens and there's weeks where decades happen. Right. And I think that is really important. Right. That it is possible. And I don't discount this. Right. A few things could change on a macroeconomic scale, that will say people will say, I don't want to write contracts in dollars. I don't want to have the dollars. Give me something else other than that can happen. Predicting that, I have no idea. You have no idea. I mean, we're just guessing here. And the important thing for us as Bitcoiners, I think, is to realize that, like, Bitcoin stands, I think it stands a realistic chance of being able to, if it gets big enough and it stays decentralized and it grows as it's currently growing, it stands the chance to be a realistic alternative that people could easily rush to when a big macroeconomic event that reshuffles the table comes, when it comes about.
yeah, I think Bitcoin would actually be the only thing that people can go to. So the way that I see it, let's say I think it would actually work in the U.S. government's favor to go with something like Bitcoin because let's say they don't. Let's say BRICS actually starts gaining some traction. I know it's probably not, but this is just a random
Sure.
scenario. Let's say
Yeah.
the BRICS starts gaining traction. Um, the U.S. has to rely on all these countries that it already doesn't trust to to print the money that it's going to be using, and I don't think that they would want that. I think if the choice is between BRICS and Bitcoin, they're definitely going to go with a Bitcoin standard. What are your
Yeah,
thoughts on that?
no, I agree. I mean, I think between some, so think of it from a geopolitical aspect, right? It's always sort of a real politic, as they say, calculus. Do we want something that can be controlled by one entity or something that is controlled by no entity, no single economic actor or country? There may be countries that have more of it, right? But that doesn't mean they control it. And this is a huge thing about Bitcoin, right? Even if the US had the most Bitcoin of any entity, sovereign entity in the world, they wouldn't be able to change the 21 million. And I think people really need to get that in their heads. Like that, there are plenty of ways to mitigate against that. You can do it through mining and nodes, and the amount of Bitcoin you have does not equal the control over the Bitcoin network, which is really critical to understanding Bitcoin. But putting that aside, let's talk about what you said. Like, the BRICS starts to gain traction. Well, what does that look like? If the BRICS were to actually get their act together and be able to work collectively, which is a big if, and they were able to do, really cut into dollar dominance globally, that would, in my mind, what that would mean is that private economic agents, private companies, private businesses, uh, you know, uh, various different commodity producers, they would start to say, I demand to be paid in the BRICS currency. I will not accept dollars for that. And even beyond that, it's not really, not to contradict what I said earlier, it's not really I demand to be paid in it. It's I demand to have economic action taken with respect to that currency. I demand loans that are denominated in the BRICS currency. I demand, payment that is pegged to whatever this alternative is, this alternative currency is. It'd be similar to people saying, like, I will only accept 5 Bitcoin for this transaction. I will take no other payment. We don't have anybody that does that today. Even the people that take payment in Bitcoin, they say, well, you can just go get the Bitcoin and send me the equivalent dollars and I'll buy it. I have plenty of my clients who are Bitcoin companies and Bitcoin individuals. They still want to pay in dollars. We offer payment at a firm and they still want to pay in dollars because Bitcoin's appreciating. I think the overall point I'm trying to make is that undermining the dollar requires the most importantly, credit markets to start writing loans and extending lines of credit in something other than a dollar denomination, because the world is currently living in a credit system.
Yeah, the credit part is the key here. So once people start, I think it's like we were saying before, it's going to take a lot of time.
Yeah.
It's not going to happen overnight. There's a lot of stages that this is going to have to take. So first of all, people are going to have to um, question the dollar, and most people aren't even questioning it at all. Most people
Yes.
have no idea that it can be printed. So we're basically at stage one right now. I mean, this could honestly be 100-year game.
Yeah, I mean, so George Gammon makes this point, and I think it's a good one for Bitcoiners to grapple with. So stick it in your head and think about it. Everybody listening to the podcast, he makes the point that there are billions of people across this planet in emerging markets, where if they have held dollars, okay, in their local goods and services, those have become cheaper. So let me just rephrase that a different way. So say if you're in an emerging market and you had $1,000 USD, actual dollars, okay, you can now buy more with those dollars than you could have a year or two ago, because locally, relative to not fiat, we're not talking about fiat, we're not talking about relative to the native currency, we're talking about locally to the actual goods and services, the appreciation of the dollar has actually, it's strengthened more so than your actual purchasing price, the consumer good purchasing price, consumer goods and services that you're holding. So for those people, they don't see the downfall of the dollar. They do not experience the inflation that we've been experiencing in the United States, where now our dollars buy 20-30% less than they did a few years ago, which is the real numbers, right? They see, well, I've held dollars for the last couple of years, and now I can buy more house, I can buy more local goods and services, and that's really important. To show the demand for Bitcoin. Demand for Bitcoin, I think, has to, in some ways, reflect a demand of the emerging markets to look at something other than the dollar. And right now, we know that in most emerging markets, what they all are about is stablecoins. They love stablecoins. In many respects, they're
Yeah.
more popular than Bitcoin.
Yeah. Yeah, I've spoken to quite a few people who are regularly spending in stablecoins, which is huge because a lot of people think that Tether is a scam and how Tether owns all this Bitcoin. And just going based on what you just said, Tether USDT is probably the one that's most widely used. USD Circle, I guess. What is it? Circle USDC.
USDC,
Um,
yeah.
like those are going to change the entire world. But then I think what that's going to do is it's going to bridge people towards Bitcoin,
Yeah, I
right?
mean, once this is the thing, like, that I think people need to get past. Like, people are upset because people are using stablecoins. I view that as so inherently positive for Bitcoin, because what that
Yeah.
does is it's bringing millions, billions of people to getting them comfortable with wallets, with digital currencies. Even if there's questions about the underlying custodians and whether they have all the assets, they're still gaining that experience and acumen that's necessary for a transition to a Bitcoin standard. Okay. And if they want to start out with dollars and then realize there's problems with the dollar, it's far easier to make that shift from USDT to Bitcoin than it is from paper currency or not even paper currency, custodial currencies like bank account currencies to Bitcoin. You're taking one of the steps you need. Now we have a digital wallet. You're taking care of your key. You're transferring in real time in that respect. That's good, right? Incremental progress is outstanding. Same thing with the ETFs, right? People are all saying, "Oh, this is going to destroy Bitcoin." No, it's not. What you're going to do is you're going to bring billions of dollars of capital to Bitcoin that would not otherwise be there. You're going to make the market more liquid, more deep, and then as it gets bigger and bigger, people are going to realize that Bitcoin can be held in a purely non-custodial way, and that's how it was intended to be used. And don't you think that makes a lot of sense? I personally think all of these things are transitional. At any given point in time, like, we had to have the steps in place to take this path, because too much change in a short term is painful for people. People don't like too much change. They prefer slow incremental change. And that's generally been the most peaceful way we have actually, evolved as a species. slow, quick, rapid, harmful things, they cause terrible consequences, right? I mean, that's generally what human history has told us.
Have you read what's his name? Lowry, the
Jason Lowery, the software.
software. Yeah, Jason Lowry. Yeah.
I've not read it. No.
Have you heard his theories around it?
I've heard what I've gathered from some tweet threads and from people talking about it on Twitter, but I would never consider myself an expert on it.
No, okay. So the way that I didn't read the book, but I listened to a bunch of his podcasts. I went through his I guess his catalog of tweets. Um, and the way that I see it, he was saying how instead of kinetic war, so right now, when we have these quick changes, when we have these changes in regimes, when we have
Yeah.
these changes in, let's say, a currency, we have a war, either to
Yes.
prevent it or to keep it, keep it, the change happening. But so the way that he said it was that Bitcoin takes kinetic war out of the equation and turns Bitcoin into the war. So essentially, it's like it's an arms race to accumulate as much Bitcoin as possible, so that you can, I guess, control as much of the wealth as possible. That's my interpretation of it. What do you think of that? I mean, I feel like that is what's happening right now. No, like that, instead of the wars being, I mean, there are still physical wars, but nobody can really have a physical war with Bitcoin.
Yeah. I think that right, you can't have a physical war with Bitcoin itself, right? You can, of course, sell Bitcoin or try to take steps to seize Bitcoin,
Yeah,
and that goes back to the possessory interest we talked about earlier. But
yeah,
what I think is interesting about that is when you're talking about Bitcoin, um, the best path for Bitcoin to become the global reserve asset, in my mind, is the Trojan horse path, the path of constantly being underestimated by the government. And the concern I have about some of the rhetoric in that Bitcoin is a war, it has national security interests. And once you start to use that type of language, I think you perhaps present Bitcoin in a way that might scare some people, maybe make people nervous. And even going back to Satoshi, in the early days where he was hesitant to have Bitcoin be used with WikiLeaks because he didn't want to kick the hornet's nest or whatever, phrasing he used. I think that's really important for Bitcoiners to be mindful of. When you're trying to put something in place that many people will fear and be negative towards, and you're going to absolutely face those who will fight you, as they say, you have to be sort of strategic and very careful with your word choice. Michael Saylor does a great job, I think, and I'll give him kudos to this, when he talks about how Bitcoin can coexist and perhaps strengthen the dollar. And I think I'm a litigator, right? So like my job is to convince people of things. So, when I think about this and I think about it's war and it's not a hot war, and I hear that language and that rhetoric, something about that just grates me because I feel like that can be misinterpreted and it can actually be harmful to the cause of Bitcoin, which I think is one of optionality. I would much rather present it than, I think my understanding from reading about Lori's comments is that it's a national strategic imperative that Bitcoin be treated with the proper attention it deserves. If that is the rhetoric you're going to use, I think there are going to be potentially some people that will use that rhetoric to justify bad things that will set Bitcoin back. I would much rather use Bitcoin in the sense of this gives optionality, this gives people freedom. It is entirely consistent with the existing structure, and people can choose. People should be able to choose in a peaceful way their path forward, rather than have to engage in warfare or national security interests. Because national security imperatives have been some of the same types of language and rhetoric that is justified internment camps in this country. It's justified, suspending the right of habeas corpus. It's justified, completely undermining the freedom of the press. Whenever you say national security is at risk, what you're basically saying is we don't care about anything else besides winning. And that, as a lawyer and a litigator and person who loves freedom and liberty, sort of makes me uncomfortable.
But it's already being. I guess that national security is a risk. That rhetoric is being used to censor people's speech.
Yes.
It's already being used to do exactly what you're saying,
For,
right?
but not Bitcoin, right? Like
No,
I
not
want
with
to be
Bitcoin.
very clear. I follow the space very closely. I've never seen a government yet do any action with respect to Bitcoin itself. Like, for example, they could easily say, because of hackers and because of cybersecurity, we're shutting down all crypto exchanges in the United States. We're doing that. It's a national
Right.
security interest. We do not want there to be actors able to exchange Bitcoin, period. We do not want people to be able to scam others. So we're ordering right now, for national security reasons, Coinbase, Gemini, and Kraken, and all the major exchanges to shut down. What they have done is they say, these don't protect investors. These are unregistered securities for the altcoins, not Bitcoin. You don't have an appropriate license to be a clearinghouse or a broker dealer. That's what they say about Coinbase, and they're in active litigation. This is amazing. I just got to do a
Yeah.
quick digression. We talk about the ETFs, talk about everything being bullish. The United States government, or at least a portion of it, as manifested by the SEC, they're in court right now saying the biggest provider of custody services for the ETFs does not have a right to exist, right? They're saying that
Wow.
Coinbase, their litigation against Coinbase, SEC versus Coinbase, says without any sort of hesitation that you are not properly registered as a digital assets exchange, that you are not registered as a broker dealer, that you don't have proper registration as a clearinghouse, and they're seeking an injunction barring them from engaging in exchange related activities. That's not my opinion.
Wow.
That's the view of the United States government. And this, again, this is the firm that holds all but, I think, one or two of the ETFs, the custody solutions for all but the one or two of the ETFs. Billions of dollars of people's money. There's active litigation from the SEC about it. And people forget this. It's almost like it's not even a thought in their mind, because I think what they think is that the government is really just trying to broker some sort of settlement with these entities. They don't actually believe what they're saying. Nobody I talk to, no crypto litigator, thinks that this realistically ends with Coinbase not operating. I don't hear that, at least, but that's the position of the government, that it shouldn't be.
Yeah. Yeah, that's scary to think about, because so many people just they think that Coinbase is going to be around forever, but
Yeah.
I mean, I don't know. I just based. I mean, that's one thing, but then there's also I also think of the fact that the exchange business is not something that's going to last forever, because people can exchange Bitcoin peer to peer. People can use the
No.
ETFs to exchange
I,
Bitcoin. So they're
I view them, in the future. I think every bank is going to be able to
yeah,
have custody solutions for Bitcoin. I think every major, brokerage house is going to let you send Bitcoin. If you want to go buy equities, you can send and deposit your Bitcoin and then buy the equities in Bitcoin. I mean, I think that the amount of integration, people are really, they're not. I mean, what if right now, and this could technologically, this is not a problem, right? We could do that if there's a market demand. Right now, I could sell my Apple stock and I could sell it for Bitcoin and then withdraw the Bitcoin without even touching fiat. I can do that technologically. There's not a reason why I can't exist technologically and from a regulatory perspective. There's nothing that prevents me from doing that right now in regulations. People say we need more clarity. I get the altcoin community needs more clarity. They really want to be able to launch new tokens and altcoins. But for Bitcoin, right, we have a lot of clarity. We have clarity with respect to how it should be treated from taxation standpoint. We have clarity with respect to how the law deals with it in certain contexts. There's at the margins, we can always get more clarity. But my point is that, Bitcoin right now, I think is still in the phase where it is still growing and needs to get exceptionally bigger to reach the critical mass that I think it really becomes a global player. And at that point, you're going to see some of these national security discussions and calls about how there needs to be national security response to Bitcoin. Right now, they're dealing it. I mean, so there's a federal court order. I shared it a few weeks ago. I'll just end with this. The federal court, I think in California, it was the Kraken decision, if memory serves. The judge wrote that the entirety of the current cryptocurrency market does not have serious economic and political significance. That's
wow,
the federal court speaking. So many people in positions of authority still think even Bitcoin is a joke.
yeah,
And honestly, that's a great thing, right? You shouldn't want them to see this as an existential threat. You should
No.
want a Trojan horse that allows it to develop slowly and steadily and get into the hands of billions of people.
Yeah, that's exactly what it is. I completely agree with that. So I think we're almost at time here. I wanted to ask you just one last question. What are your thoughts of the most important downstream effects of Bitcoin?
Oh, that's a great question. So I think the most important downstream effects of Bitcoin currently is I think that what it is doing is it is making people think quite a bit about currency, the money system, the credit system, what is the proper way in which we order our economy with respect to our money overall. Because I think the Bitcoiners have brought up this discussion, and we've all lived through, 2020, the pandemic. I think the Bitcoiners really originated this discussion of the money printer go burr and the problem with the system and the fact that we have the Oprah Winfrey show. Everybody gets a bailout when anytime anything bad happens, and um, to me, that is concerning because I think it causes a lot of distortions in a proper functioning productive society. We have to have stakes. If you don't have costs and negative result that comes from manipulating the money supply, manipulating how economic actors perform in a setting, what you end up doing is you end up creating a society that is no longer focused on shared prosperity and growth as a whole. You end up focusing on a society on how do I get my money? How do I figure out how to manipulate the system and do what I need to do? I know scores of kids who they think about one thing. They don't think about creating the next business. They don't think about how they can, contribute something with their lives. They don't think about how do I write that next great novel or write that next great song. They think about how do I extract enough value so I don't have to do anything anymore and I can just go ride around in a Lambo. That's damaging for a society. And I
Yeah.
think that I mean, I see it in all facets of life. I see people focus solely on the short term, focused on how do I get something out there. And AI honestly is making it worse in many respects. Like I'm sure you have a nice sized Twitter account. You go on there and you read all these posts about 14 ways to do XYZ or how to use AI to never work a day in your life and sell some BS course to somebody that was written by a bot in 5 minutes. That sort of short-termitis prevents us as a species from moving forward. So the downstream effects, to answer your question about Bitcoin, that I view is it brings real cost, real way of measuring things, and it makes people think about the games that are being playing by central planners that think that every solution can be handled with a few strokes of the keyboard.
Yeah.
That's negative, right? That's really dangerous for a society.
Yeah, you just throw money at things, and that's your solution essentially.
Yeah. Everything can be handled with a pill or a get rich quick scheme or some sort of easy solution. We don't have to wait for anything. We can, always get things on demand instantly. If you don't like this altcoin, you can launch 4,000 more and one of them is going to pump and most people are going to lose money. But guess what? You are already poor. So it doesn't really matter. You're already buried under debts. I mean, people need to start. I try to bring some optimism, even this question. I try to get people to think like, you live in time with a lot of power, privilege, rights that you would never have had, right? The fact that I can get information from across the world, that didn't exist hundreds of years ago. I was dependent on the local newspaper, or if I had a newspaper, or could afford one, for telling me what the facts were. I had no ability to go out and search new information. Um, you know, we need to get optimistic because we have a lot of power as individuals. And if people look at Bitcoin and people realize that Bitcoin is only one tool, I think that we're going to have in the next, 10, 20 years to get people back on the path of realizing their unique potential as human beings. To me, that's exciting. I want people to be excited about that because it's just one tool, but it's an important one.
Yeah, I completely. So I think just as a summary of what you're saying, I think people are going to just what I picked up on here. So you think that people are going to go from being high time preference to low time preference.
Yeah.
That's gonna be the transition. I think that's so important. I think that's what changes everything about society. That's what changes our relationships. It changes how we build things. I think that there's also a connection there. I tried to make it in a thread before, but there's a connection there to planned obsolescence. There's a connection to uh, environmental damage, global warming, all the stuff that we
Fraud.
claim to be
There's
problems
a
today,
connection to fraud. Okay,
right?
downright.
Exactly.
No, I mean honestly, like when you pervert the money supply and tell people there's
Hmm.
not going to be any repercussions, that is very problematic. That it promotes fraud. Okay,
Yeah.
yesterday, okay, we saw TD Ameritrade, TD Bank, excuse me,
TD
TD
Bank. Yeah.
Bank pay billions of dollars in fine, and I was in a room and a space, and someone was asking me, Joe, how is it possible? As litigator, tell me how it's possible that the government can find there to be criminal charges for money laundering, violation of the Secrecy Act, but not a single executive, not a single C-suite person goes to jail. They don't get even charged with a crime. And the reality is, I think it goes back to the fact that there are problems in place in our society that we don't really uh, uh, we don't follow a path where we really prioritize what is right. And low time preference conduct, low time preference mindset, it prioritizes what is right. Do what is right,
Yeah.
because if you do what is right, you will be rewarded. We prioritize do what is easy and quick, and you can't get caught for. That's the issue.
Yeah. I completely agree with that. All right. That was an awesome conversation. I had a lot of fun
Yeah, same
asking
here.
you questions. I think it was. I think you answered a lot of questions in ways that I didn't completely even think about before. Thank you so much for your time. I appreciate it. Where can my audience find you?
Yeah. I appreciate it again for having me on. At any point, we're going to have an exciting year next year, I think. So I love to come back. If you have a litigated matter, which is my day job, it doesn't necessarily even need to be in the Bitcoin cryptocurrency space. If you have a litigated matter, you can reach out to me. You can Google my name and my website pops right up. And I'd love to help you. And I guarantee you that if I can't help you, I know someone in the space who can. So you can feel free to reach out, and I refer a lot of business out to people that are the most important, most suited to handle whatever legal need you have. I am also obviously very active on Twitter, also known as X. If you go to @Joe Carlasare, you can find me there. I try to keep Twitter sort of separate from my law practice. So if you have a litigated matter, I would prefer you reach out through my law firm's website and my email, which is publicly available there. But otherwise, stay in touch. And I definitely want everybody listening to this to remember that we have a long road ahead of us in Bitcoin. We should be focused on the long-term potential of the asset. And we shouldn't be discouraged if you see a lot of short-term volatility, because that's part of the build-out process. That's part of the way you turn, I think, the richness of Bitcoin into a diamond and present it for what it is.
That's exactly it. Very well said. I appreciate your time, Joe. Thank you so much for joining here.
Thanks again.